Well, it looks like the markets have become quite volatile once again. In fact, in recent times, stocks have seen some of the biggest declines that we've seen for the year so far. So what's going on? It's reasonable to ask, why is the trade war the reason? Because it's been going on for some time now. So what's changed recently to unhinge the market? Well, investors felt like they had a bucket of cold water thrown on them when Donald Trump announced the latest round of tariffs.
China has to do a lot of things to turn it around, but you'll be seeing they've got to do a lot of things. It goes on September 1st, and frankly, if they don't do them, I can always increase it very substantially.
This was a real disappointment because it was only a short time ago that there were lots of handshakes and smiles at the Osaka G20 summit at the end of June, accompanied by promises to resume discussions between the two superpowers. But the latest plans to impose 10% tariffs on the remaining 300 billion of Chinese imports, which are mainly consumer goods, from September, was a grim signal indicating that the breakdown in the relationship between the two countries was moving to a more serious level at a time when the global economy is slowing. Another example of the deterioration has been the very specific way that the Chinese have retaliated to the latest US tariffs. The Chinese government has asked state-owned enterprises to suspend the purchases of US agricultural products, further damaging US farm incomes. The move comes at a time when China is already pulling back on US agricultural purchases. For example, China is the biggest buyer of soybeans in the world, and in the last half year, their purchases have fallen to the lowest levels since 2004. The other concern for the markets is the potential for a currency war. Investors got a glimpse of this in recent weeks when the Chinese allowed their currency to fall to the lowest levels since the GFC. A move on the part of the Chinese which was seen as making their exports more attractive to foreign buyers. If this behaviour escalates, the danger is of the unintended consequences. It's really hard to gauge the ultimate fallout. And what's really important at the moment are long-term interest rates, which are hitting record lows, indicating that investors are becoming a lot more pessimistic about the outlook for activity. And that's one of the signals that the stock market is watching most carefully at the moment. The further long-term interest rates fall, the more volatile stock markets tend to become. With no resolution in sight for the trade war, Australia has become one of the winners to emerge from the dispute.